Welcome to our live streams. This is where the grown-ups trade. No hype, no flexing, no TikTok guru nonsense. Just focus, discipline, and respect for the craft. Here we trade gold, the oldest store of value on Earth, at the precision scalping level. That's where trading gets real. Where a single tick too early or too late decides everything. It's the hardest style of trading there is. And the highest form, too, because it demands mastery of mind, structure, and emotion. Execution over ego. Reaction over prediction. Can it be the most lucrative? Yes, but only for those who earn it. There are no shortcuts here. You can't fake discipline at 10-second speed. Most gurus out there sell you dreams from their demo accounts. We build traders who can survive the market on their own terms. We don't promise easy wins. We teach you how to build a system that doesn't break when you do. If you're here, you already know what that takes. Grit, gumption, the willingness to get punched in the face by uncertainty and still show up tomorrow with your rules intact. Because precision scalping isn't just a trading style, it's a mirror. It shows you who you are under pressure, and it forces you to get better, not just as a trader, but as a person. The focus you build here, the emotional control, the ability to act without hesitation, those are life skills. They translate everywhere. So welcome to the Barcelona Trader, where we practice the hardest craft in markets and one of the most rewarding in life. Let's get to work.
Good morning. Good morning. Hope everyone's doing okay. It is Thursday, April 9th, and we are getting ready to trade the New York session. So let's take a look at where things stand right now. Right now, spot gold is trading at 47.49, 47.50. Seems like it's trying to push up. What we're looking at here right now is, all right, this is the 1 minute chart for spot gold. Let's take it to the 5 minute chart and stretch it out a little bit just to see what we got here. So we pull back, we opened here at 6 p.m. last night over here on the far left with this gray vertical bar. Came down. This was our opening range when we started our session. We pushed out of that opening range. It was a false breakout, came slammed all the way back down to the bottom. That was a quick drop, lost some money there. And then we kind of pushed back out. We really pretty much stayed in this range all the way up until, again, right around here at the beginning of the London session. And still stayed a lot in that range during the London session, but ultimately pushed out of it. And now in the pre-New York session, we are definitely out of it, up above this bear volume, pushing up to the previous day value area low, right? So, take the music down just a little bit to kind of get in the zone. What we have over here, we have the dollar, which is taking a dive, 98.84, just over the last 10 minutes or so. This is lower than it was when we did the analysis. It's taken a dive there. So since gold is priced in dollars, that should push the price of of gold up. Volatility index relatively low. The gold volatility index also relatively low. Not super low, but you know, we'll see how the session goes here. We'll see how this starts to print. Got latest news on gold says, who's buying gold? Which country tops the list as central banks extend 23-month streak? Oh, look at this, and we're pushing up right now back into the daily pivot point. It is 7:45 exactly. So we're going to set our alerts here for, let's see, We're going to do 7:59, which will alert us for that 8 o'clock candle. We'll do 8:19, 8:29, whoops, 8:29, 8:59, and 9:29, and 9:59. Very unlikely to be here that late. Okay, let's go to our broker platform, see what we have going on here. Okay, looks like we're all synced up here. All right, so just to orient us here, on the upper left, we have spot gold on the 10-second chart. Right here in the middle pane, we have futures gold on this 10-second chart. That's what I'm actually trading today. And we have down here the US dollar index, the DXY. And that is on the 1-minute chart. Over here on the far right, on the upper far right, we have the Renko chart, which we're streaming in from my other computer from MT4. And if I click on that, then we see one screen of MT4. And I click up here, that's the other screen of MT4. So sometimes I'll be making references to this and want to show it to you, and it's just kind of overlaid over this home screen. All right, so put it back on the Renko. There we go. Down here at the bottom, we have the US dollar versus the gold relative strength index from FX Blue. Right now we're seeing the dollar at -5.8 and gold at +1.3. In theory, that should mean we are going down if that is just a snapshot in time, but it's not. These two can be converging. Dollar could be gaining strength, gold could be losing strength, and even though one is stronger than the other, the inverse could be happening just based on what direction that is taking. But right now, it does look like we've got some solid movement to the top. So let's not get overly dramatic about it. Let's just watch how it plays out right around here around the DPP and see if it gives us something to trade. It might give us a bit of a run down right now here, having hit the DPP. It could be saying, nope, that's a little rich for me. I think I'm going to take a little run down. But I haven't been on the chart long enough to really get a feel for it and decide that that's a good trade. So what we're going to do right now is open the Zoom room. Okay. Now, let's adjust the camera angle and get into the zone. What do you say? Trades hold. right. Now this is probably a sit on your hands moment here. And as we sit on our hands and wait for something to happen, we can talk a little bit about our indicators here. Now what I like to do, here we have kind of a naked chart, except for some lines I've drawn across it. Yellow, we use Hakanashi candles. The yellow candles are the bullish candles, or the golden candles are the bullish candles. The blue candles are the bearish candles. Blue for tears of sorrow. And we have going across the screen every once in a while, you'll see a line like this faint line right here. This is the WM3 pivot. The purple lines are the daily pivots. This one right here is the daily pivot point. This is previous day. What is that? Previous day value area high? No, previous day value area low. That's where we're there right now. If I add the indicators back, what you'll see I have in terms of indicators are a regression channel, these yellow dashed lines and the yellow solid line going right through the middle of the channel. We have a bear volume and a bull volume indicator. The bull volume will be down here somewhere. We have swing highs and swing lows marked, and we have support and resistance lines that auto-generate as price evolves. And lastly, we have a 9-period exponential moving average running right through price, helps us with the scalping. When we're on the top side of that, we're in a buy. When we're on the bottom side of that, we're in a sell. Not always, almost never actually, but when we are in a buy or a sell, we use that 9-period exponential moving average to help us understand when to get in and when to get out. So as you can see, we are pushing up right against the value area low, yesterday's value area low, and the daily pivot point. So both of those things are going to create some resistance. It will make it hard for us to push through that. So it all depends on volume and momentum, how much activities there is in the market today. In fact, we could go ahead and put price in a box. So I'm going to do that. That's our box right there. I'm going to call this box Thursday, New York opening range. It is sit on your hands time. All right. Let's talk for a minute about what we're looking for in terms of types of trades. We have a number of different setups, but the type that we're looking for we call leapers. What are leapers? Leapers are when price hits a level that's clean. That's the L in leapers, a level that's clean. The push through that level or back from that level has to be real, some momentum to it. We have to be in the right session, so we have to trade between 8 a.m. and 11 a.m. That's our session, our New York session. And we have to have a safe leash. Safe leash means that our stop loss has to be far enough away that market structure, if we're right about direction, market structure can reliably protect us from the trade going against us the wrong way. Okay? So that's what we're looking for, what I call leapers. Okay, we are seeing gold get a bit weaker versus the dollar. So we could be seeing a bit of a reversal here that would give us a safe trade downward. But we are 3 minutes away from the clock, and I don't think I want to get into a trade this close to the bell. All right, we've changed the camera angle a bit. Let's lower the vibe. Okay. Let's light our trading candle. Trading candle lit. Set that over here. Again, we're just kind of sitting on our hands. Nothing's happening right now. In fact, nothing may happen until 8:30 when that jobless report comes out. Let's take a look here at the news. Okay, so here we are at Forex Factory. Let's refresh it. Come down here to Thursday, April 9th, 8:30 a.m. We have core PCE. We have final GDP. We have final GDP price index, and we have unemployment claims. So we've got more than just unemployment claims coming in at 8:30. Mixed data could throw things off in any direction. Now, while we're watching this screen together, you will also want to be watching spot gold on the 1 minute, and the 5 minute, and the 15-minute chart, and even the hourly chart, just to keep your bearings of where the market is. You know, I have it on back here over this direction, over here. You know, my execution screens are over here. I saw it in time. I moved it, but a little delayed reaction in my execution. Unfortunately, that popped right into the DPP before I got in. I'm just trying to battle my way back here a little bit. Let me update my stats panel. Let's see, here we go. Taking 3 trades, 2 wins, 1 loss. That was kind of devastating, so I'm battling my way back on that. But we'll get there. The market seems to be calm enough to navigate today. Again, we're scalping on the 10-second futures. Now we're coming right into a bull volume on the 1-minute chart. So if we look over here, I'm sorry, on the 5-minute chart, see we're coming into well, it's a bear volume, but it's probably, we're going to see if we can push through that. And we're coming up on the WM3 right here. 2 things I don't really want to trade into. Also, if we look at MT4, we see here on the 1-minute, we're coming up onto a support right there. And on the 15-minute, we're coming up onto a support right there. So both of those things are giving me caution. At this point, I stop being cavalier and confident about the entries. and just focus on what price action is doing. If you're new to the stream, please give it a like, give us a subscribe, sauce me a follow every morning. And if you really want to get down into the weeds with us, you can join our Zoom room, where you join me here live on screen, and without the YouTube delay, if you want to, you can take some scalps with me. Not financial advice, but you're willing to do that. My job here is to teach you how to trade. Here we trade what we see. We do analysis, but we don't try to make predictions about which direction the market's going to go. At least we don't make predictions very far in advance. We make predictions a second or two in advance. Okay, so as we hit these, we've got not quite parity. The dollar's a little weaker than gold, so we should expect some upward momentum here. Let's check and see. Well, we can see here what the dollar's doing. The dollar's trying to push up. If it continues to do that, then gold should continue to push down. Okay, it's 8:19. That gives us 1 minute for the COMEX open. There's no denying it wants to come down. You know, we're well outside of the box that we drew. You can see, come way down. We're at the bottom of the channel. The bottom of the channel, combined with the supports that we're seeing right here, give us a confluence of indicators suggesting that we might want to be thinking about going back up. We're at the swing low as well, but look at that. It's wanting to push down through. It's got some momentum. That was the COMEX open right there. So COMEX gave us a little nudge down. But I don't like all the supports that we're hitting right now. I'm seeing on several different indicators it telling me that we've hit at least a temporary floor. All right, let's take a little trip around the block here and see what we've got. Dollar on the 30-minute chart right up here, the DXY, and here on the 1-minute chart, we see the dollar is trying to push up. We see yields are pushing up. The yields and the dollar tend to move inversely to gold. Gold has been coming down, but if we start looking at it here on the 1-minute chart or even on the 10-second chart, start seeing that it's might be trying to push up as well. But I don't know, that's a lot of momentum up for the dollar and for yields. So if we can push through these floors that coming up on these supports, then we might be going down further. But in the meantime, it's time to sit on our hands and just relax, pay attention to what's happening here. Okay, looks like we've hit that floor, so we might be going up. But unless there's something really clear here, I'm not going to take a trade because we've got 8:30 coming up, and that's when we got news dropping. So a lot of the bigger players are probably staying out. We do push down from here, though. It would qualify as, you know, what I was saying earlier that we like to look for, which are leapers, remember? So if we get down here to this WM3 and then push below that, let's say, you know, right here, we push below this level, then I would say we are in a area where price can continue to go down further. We can take a sell there. Got about 3.5 minutes for news. About 3.5 minutes for news. And again, for news, we're going to have, let me bring this over here and blow it up so we can see it. Forex Factory. For Thursday, April 9th, we've got 8:30 news. We've got core PCE price index. PCE is personal consumption, right? Bureau of Economic Analysis. Change of price in goods and services purchased by consumers, excluding food and energy. And we got final GDP price index quarter over quarter. And we have unemployment claims. So all of these, when this news comes out, gives an indication to the Fed about whether they want to keep interest rates the same or raise interest rates. Then, of course, we've got a lot of geopolitical things going on at the same time. They're keeping the dollar higher, tariffs that are keeping inflation higher. So all of these things influence. But as the market tries to get a beat on what the Fed might do, it gets priced into the market very quickly. We have 2 minutes and 10 seconds for this news to begin to drop. And a lot of times you see movement right before the news. But sometimes those are traders that are front running the news, think it's going to go down, so they're getting their sells in. But also the big institutions see that, and they see a lot of people selling, and they say, you know, they have their own internal statistics department. They kind of know in advance what the news is going to be. So they prey on the retail investors. And if retail investors are going short, they're going to go long. All right, let's see what happens. We've got 1 minute, 7 seconds to go. Now, yes, I'm interested in what the news is, but it takes a few seconds, sometimes 10, 15 seconds for the news to populate, and by that time the market has already reacted. I usually tend to stay out of the market in the initial chop, but depending on what the reaction is and how strong it is in any one direction, we trade what we see, not what we think is going to happen based on what the news says. So we wait for the market to react, we wait for the algorithms to settle, and then we decide if we're going to take a trade. We have 5 seconds, 4, 3, 2, 1. Let's see what happens. Looks like we have some upward momentum here. Is that what it's going to do? Still no populated news that I can see. It'd have to be bad for dollar, for gold. But still none of this is populating, and we still don't have enough of a reaction to trade. Still no news populating. It's out there. Some people know it. It's just taking a while to populate through the website, it looks like. We are getting some upward momentum, but again, that's not enough to be confident in a trade. Okay, we have some mixed data. Most of it is bad for dollar, good for gold. But unemployment claims are pretty bad for dollar, good for gold. Yet, going down. So again, we got some fake outs, some algorithms, making some decisions, deploying large amounts of capital, pushing price one way and the other, shaking out retail traders. Looks like we're starting to establish a direction. Not ready to commit yet here. Okay, I think I'm ready to take a little flyer. It's not being very generous with the push. In fact, it's coming back down on me a little bit. Well, I don't like that. Okay. Took a loss there. I'll update my stats panel in just a moment here. Not giving us big moves, but we kind of have to take what it's going to give us. Yeah. So before it takes it away, I'm just going to take that because it's not going to reliably give me anything. Okay, got a little bit of a fake out there to the top. Coming back down. I'll take a little ride back up there to the top, maybe. I'll take that. $60 right there. Good. Good trade. Okay, I need to update my stats panel. I haven't done that here. I'll do that in a minute. I'll be back. Hang tight. Okay, I'm back. Let's see what we got going on here. All right, nothing. But it is 8:46, so the morning is still young. If you're wondering what you're looking at here, you can go to the BarcelonaTrader.com. When you get to the blog, I think one of the first blog posts is charts and indicators, spring, summer 2026. Check that out, you'll understand what you're looking at here, and here, and here, and here. This is just the 5-minute spot gold chart. You can kind of see what it's been doing from, well, if I move it over here a little bit, you can see the market open. Right here, this gray vertical line. Let me do it so you can see everything. The gray vertical line here. We're getting some movement. Now I'm gonna come back here and check this out here for a second. Now that is in height from which it came down. And so I'm not 100% certain that that is, you know, where we want to stay. I mean, what am I trying to say? That's about the height from which it would come back down now. If that's just, that could go higher. Yeah. It always wants to fake you out a little bit first and think you're going back down, and then you get into that short and they buy your liquidity and send it up. All right, so let me change the camera angle here, and we'll talk a little bit about some of these indicators and what we're looking at here and what I'm looking for when I take a trade. How about that? So let me switch the angle. Hang on. I think the one I'm looking for is over here. There we are. Okay. So, what are we looking at here? There's nothing to trade here. If you hear me being quiet, it's because, we're just sitting on our hands right now. The news has dropped, created a bit of movement. Basically, we've come down here in the New York session. If we look at it here on the 5-minute chart, this orange box right here in dotted lines is outlining what I consider to be the New York session for scalping gold. And so it starts at 8 a.m. This is the 5-minute chart, so each candle represents 5 minutes. For the first 5, 10, 15, 20, 25, 30 minutes, we came down. So right at 8:30, we kind of had this bounce up, but it wasn't much of a bounce. Went from 47.32 to 47.35. I mean, that is a 12 pip bounce, but that's not a, that's not big for a news event. We've kind of stabilized out here. And so, we're really just printing a barcode here on the 1-minute chart. Right here, right above the WM3 pivot. And we're in this kind of downward regression channel. Back over here on the 10-second futures, price is 47.71, but on the spot chart, the price is 47.46, but you can see that they move in tandem. Over here on the left, we have spot gold. Over here on the right, we have gold futures. Excuse me. And then we have the US dollar index, often called the DXY. I like to watch that. It's like keeping your eye on the enemy. The dollar and gold tend to move inversely. Sometimes they don't, but you get used to that market as well. Now over here, when I have things like this, what you're looking at over here is the Renko chart, spot gold. It doesn't move based on time, it moves based on price. So if it's not moving at all, there are simply no price changes. If it's moving, that means there are price changes. Even if the candle hasn't closed yet, sometimes you can see where things are going. Sometimes the Renko follows futures a little bit. Sometimes it front runs futures a little bit. When it's doing that, you get better entries. We have 1 minute for 9 o'clock. Okay, close the Zoom room. I have no one participating, and it's taken up bandwidth and processing power, so free up some resources. Okay, here we go. It looks like we're getting a little bit of movement. That is on the 9 o'clock candle. Let's take it. Does it have a little more in it or no? It does not. A market like today. Look at that, just how it just went wildly against me. You know, it keeps going against me in a crazy way. So I think I just get out here before I regret it. There. Basically got out break even. Thank goodness. So I guess we're trying to come down, but it's just finding too much resistance, finding too much support. See, eventually it would have paid me something here, but look, I would have had to go through this. And by the time it gets here, I'm getting nervous that I'm in the hole. And I want to start bailing. So, you know, I like this market better if, you know, I can't size up. I gotta size down. It's just not, looks like I need to turn my camera a little bit this way so I stay in the picture a little bit better. Okay, let's see what we have. Hattie, come on. Again, don't want to risk today. It's not my day to risk. Let's see what we got here. I'm just gonna get out. All right. Took a small loss on that, about $12. But just felt like it wasn't doing what I thought it was gonna do. So I'm not gonna wait around.
Yeah, that's right. That's right. Moo was right. You stay there.
If it pushes out of here, okay, let's see. Yep. Okay. Took back what I had. Spot gold seems to be traveling a little farther. And that was a win, so I'm going to update my stats panel again. Okay. It is 9:11. And it is looking like it still wants to go up, but we are starting to run into some obstacles. Is price coming at the bottom of our opening channel? We're getting through there. It did get through there. We came down to the WM3. Now we're coming back up into the range. Ultimately, although it did take some time here, that was a failed breakout. That's pushing back up through, or will it kind of topple over and come back down here as we are at the top of the channel here? Okay, we're starting to get our answer there. It's pushing up through into this bear volume. Okay, we are hitting this this pivot right here. This pivot is the daily pivot point. So we haven't been able to break that. We tried to break that, what, an hour ago at about 7:50 a.m. So an hour and 20 minutes ago. And we couldn't do it. We're trying to do it again. Let's see what happens. Or are we just going to fall straight back down? On the 1 minute chart, looks like we're trying to come back down. Five-minute chart hasn't yet indicated what it wants to do. So these bearish 1 minute candles might just be putting the bottom wick on that candle. On that 5 minute candle. Yeah, dollar's still trying to head down. If you look here on MT4, on this 1 minute chart, which is the center pane, see we've got a lot of resistance on the way up. Untested resistance, weak resistance, verified resistance, weak resistance. Yet resistance all the same. So we need to more intrinsic strength in gold. It is getting stronger versus the dollar, as you see down here on the FX blue chart, relative currency indicator. You know, I just don't like trading, and why take the risk? That was nasty. Never does that in your favor. Yeah, I should have taken a buy here. Obviously, I should have taken a buy here. But I mean, I should have known to take a buy here. You could still pay me, but that doesn't make this a good trade. Yeah. Yeah, just get out, you know. It's not doing what I wanted it to do. Better to get paid $7 than take a loss. I'll update my stats panel here in a moment. Yeah, I'm not going to play that game again. It burned me. Honestly, it doesn't look like that's really what it wants to do. If it does, well, without me. All right, we have 1 minute for 9:30. 1 minute for 9:30. And the equity market's open. The New York Stock Exchange. That opening, and since gold is priced in dollars, it moved gold. And then, of course, you have ETFs and other gold-related stocks, forth that also impact the price. All right, so we've got 15 seconds for that to hit. We let the algorithms battle it out for the first, few seconds or minutes, we get a feel for what's going on in the market before we decide whether there's a trade for us or not. 9:30 right there. Some up, some down, some whipsaw. And my guess is we're gonna take a trip down. But it'll still fake you out at this level, so you don't want to get in yet. And it'll take you down another notch and then whipsaw you out. So what you're really hoping for here at 9:30 is for the market to pick a direction. Once the New York Stock Exchange gets going, then this picks up a direction. And then you can get some trend trades. Is this going to want to come down here? So you see, when it starts doing that, even if it then decides to come down, you just can't trust it. And then sometimes it moves without you, but you know why you didn't get in. Okay, so let's see here. $9.31. Right, you know, it's capped on the upside. Again, there we're seeing a lot of resistance. If I show you here on MT4, we've got resistance here, and then resistance above that. This is the 5-minute. And then here on the 1-minute, which is the center pane, we've got, you know, several layers of resistance. So if it's unable to grind through there, and it's been trying, then it doesn't really have much of a choice but to come back down and pick up some orders down here before trying to go up again. And that's, you know, that's if it's feeling bearish, I mean bullish. So even if it's feeling bullish, move a bit bearish. There we come. Let's see if it gets past this support here on the 10-second. No. See, the Renko's coming back up. So pushed you down, tried to fake some people into getting in. I mean, if you look at the 1-minute, it's just printing good right here. Look at that. So, you know, it feels like it's trying to come down, but boom, boom, whipsaw, up, down, up, down, up, down, wicks on both sides. Can't trade that. Okay, now it's trying to push up, but again, that's where all of those resistances are. So how's that going to work? I mean, if it has enough momentum, it'll definitely get through there. But you got to be sure it has the momentum. Otherwise, if you get into a trade while it's trying to push through there at any second, it could just push back down. If we look over here at the other charts on MT4, you know, we see this big resistance up here on the 15-minute chart. Good. But we are also hugging the monthly pivot point. And there it goes, pushing through. I hate to see that, you know, I hate to see a good move go without me. But as long as I know why I didn't get into it, I can kind of let it roll off my back. I don't let it impact me emotionally. I suppose it does a little bit, because then if it keeps happening, it happens again and it happens again, but I feel myself getting frustrated. But it happens one time, I don't get frustrated. You know, my indicators save me more often than they cost me. And trading is absolutely a defensive game. Rule number 1, protect your capital. Took another win there. Okay, update the stats panel. And I need to be explaining why I'm getting into these trades. So let me go back and do that. Okay, so this last trade that I took, whoops, get my screens back up here. If you zoom in here a little bit, you'll see there's a little blue here. That's where I got into the trade. And then there's a red arrow pointing down here. That's where I got out. Now what I was seeing here, let me spread this out a little bit. Now I said I like to look for leapers, right? We have several different setups that I use here, but what happened was price had hit this level. It had hit this level once before too, several minutes earlier. If I pull back here, you see, come on, I'll be back here a little bit further. Yeah. Am I right about that? No. Oh, I see what I'm seeing over here. I'm looking at this. It's the same time frame. Okay, so it had hit this level. I'm sorry. It had hit this level. Right? It hit it here. It came back down, and it was showing upward momentum. We'd been seeing upward momentum this entire time. It was showing me strong delta candles here, showing me strong at this level. So I entered the trade here thinking that it would pop. It did pop. It popped right here in the first candle, then came back down a little bit, and then popped again up here. I was thinking it would go higher. I was thinking that I would get a pop maybe up to here or something. It didn't. I could see it was starting to stall out, so I got out of the trade with about $15 profit, not that much. But had I stayed in, it would have kept going. Basically, all of these candles stayed on the top side of my 9 period EMA, which would be my signal to stay in the trade, unless it's really breaching down through here. So had I stayed in the trade, I would have made more. But it looked like I was topped out right there, so I took the win and got out before I risked having it come back on me. Yeah, not a bad day. Some days it feels like you're riding a bike, like you know how to do it. Other days you show up and it's kind of like, I've never ridden this bike before. Some days it's just in tune with the way you like to trade. I think it's got a little further ways to go here. Again, not doing what I want it to do, so just gonna take the small win and because when I got into the trade, I thought it was going to do what I wanted it to do sooner than it showed that it did. So when it didn't do it, it went against me a little bit. Then by the time it came back and was giving me just a little bit, I'm thinking I'm just going to get out of the trade. I read it. If then it pops and it goes without me, that's just something I have to get better at. But I have to play defense. I have to master my defensive before I master another offensive move.